Welcome back to the Chandler Chase Show, where we dissect excellence and we build it into action. Today, I'm sitting down with Sal Buscemi, Wall Street vet turned direct investment rainmaker for family offices and the ultra wealthy. Sal's moved more than $500 million into off-market real estate and businesses most people never even known existed. Get ready on how to hear how he sources asymmetric deals, structures risk so the house always wins, and keeps clients begging to wire more capital. Grab your notebook. Class is in session. Okay. Sal, thanks so much for coming on the Chandler Chase Show, right?
Chandler, how are? Oh, sorry. I'll be quiet.
No, it's good. No, I appreciate you. We had our first talk. Um, I don't know if you know this, but the first time I found about you was your LA, your Class A industrial deal that you did in Las Vegas on YouTube.
Oh,
And what
really?
set you apart was how you talked about finance, in particular investments. So when I realized that there was a way to get in touch with you, I figured it out right through LinkedIn, and then we hopped on a call and you talked about what you do. And that's what I wanted to share today. I want to bring people on to share about what you do. I know you because now I'm in your mastermind capital raising mastery group,
Hmm. Yeah.
and where you talk about Class A real estate deals and opportunities, family offices, and investments. So
Hmm.
for those of you who don't know you, just give us a little bit about you and what you do.
Chandler, I appreciate the opportunity to speak on the Chandler Chase Show. As I said, I envy your name. I mean, that's a deal maker's name right there. My name has been ruined, but it's salvatorebuscemi.com. People sort of slaughter it. They can't say it correctly. And I always know when telemarketers call me, for example, right? It's not a close friend. It's not like Chandler calling. Anyway, my name is Sal Buscemi, and I've been in the real estate business for about 30 years. I started my career at Goldman Sachs in the investment banking division, and at the age of 29, I raised $30 million from a Park Avenue investment manager. From there, what we were able to do was to build on that and have another institutional fund. And then soon after that, I started getting sort of outbid on certain real estate assets, Chandler. So I was doing a lot of private direct investments into companies at the time, companies with names such as Stripe, SpaceX, AI.io, Thrive Bioscience, um, sci-tech development, all of which have done very, very well. And we had an exit last year with Sing Life, which was great in the first quarter. And right now we make private direct investments as a family office on behalf of 13 families that my partner Albert and I know since our days since leaving Goldman Sachs, and in his case the Rockefeller family office, right? And so that's who we work with, and these are the families that gravitate towards quality. They're already rich, right, Chandler? They're not looking to get rich, so they're just they have operating companies or a lot of cash they're sitting on that needs to be deployed somewhere, and that's what we do, and we help them take care of that.
What was the moment that changed everything for you?
There's a lot of them, but I think, the spontaneous death of my father due to a stroke really made me focus on things that were maybe a little more important at the time. And I think it was sort of the pain that I was going through, not so, so much of missing him, but it's sort of like, well, what does this go for me? My father passed away when I was 24, working at Goldman. I was able to spend a lot of time burying my stuff in the work. However, it made me think about what I wanted to accomplish at the age of 30 and have that vision to be able to do so. And at that point, I write about it in my book, Investing Legacy, which you have. And anyone who listens wants a free autographed copy, I'm more than happy to send it to them. Chandler, you can get us, you can email me, sal@investinglegacy.com, your address, and I'll get you one out in the mail. However, we talk about that because there's different inflection points in people's careers where people just think it's very, very static and it just follows one way. But really, today, with the advent of entrepreneurship and social media and other things, the career trajectories change, and there's not really so much the same as like working at the same office or company for 40 years. So, things have changed, and I'm, been very focused on, building my own talent stack, if you will, to accommodate being more interactive with families. And that's made all the difference because that's what people really want today. But it was born off of an opportunity of me being forced to think about myself and take action, sink or swim. Because when you do things at a young age, it's much easier to make mistakes and move on than it is if you're starting in your late 40s and you're trying to raise a lot of capital. Does that make sense?
Yeah, that makes sense. And and especially that you pivoted, right? Because you're new
Mhm.
to Miami and South Florida. How's that
Oh,
pivot
yeah.
changed from what you've been focusing on now in real estate and dealing with investments?
I think, to be honest with you, you got to be close to the action. And if you're in, major areas like San Francisco, Southern California, South Florida, Palm Beach, and Miami, and New York, you're in that action. And I think that's the most important part about the whole search circumstances. How close of proximity are you where you can touch people? And that's to me what's most important. Moving to Miami was concerted decision on my behalf because I knew that there were a lot of friends here. But I had a warm opening just because of what I did, that I'd be probably warmly received in certain circles that people knew me already, and I was able to expand upon a network. And I've done that I've done that many, many times, and it's worked out very, very well. And the reason for that is because to me, that is like a core skill that I need to use. And a lot of people don't understand the importance of networking, but it's very, very important. And when I first moved here, I had a fear of missing out of all these like conferences and parties. Now that fever sort of subsided, but I still networked a lot.
Let's kind of dive in on that fear, right? How do you drive through that fear now that you're building those relationships?
I think a lot of people, they're just some people aren't persons, right? And I think that's something that, you can adapt and, you can rewire yourself. It's not like changing your muscle type from slow twitch to fast twitch, right? Like it's just a skill. That some people have skills, they're natural writers, some people aren't. Some people are natural networkers or people, some people aren't. But when you're raising capital, I think what you need to do is to alleviate any fears, to be, script yourself. What do you do? I can't tell you how many times I've gone to conferences and guys just go on, and they're going back like literally 50 years before I was born, talking about what they did in the public markets. Nobody really cares about that. It's like, what are you doing now? Like, I don't want to hear your whole life story. Refine it in a way where it's bite-sized so somebody can understand it, walk away and tell somebody else what you did.
I really love that you talk about that, being relatable and talking about now, not back in the old school days or what's on your, on your chest or dress, right, with your trophies. Um,
Yeah, yeah, yeah. Like Al Bundy, the football player, right?
right. Do you find that people like often misunderstand anything about what you do when you're, engaging in these conferences and these conversations?
No, I don't. And the reason they used to, but the reason why they don't is because the reason why they don't, and I'll tell you, is because I came armed with a book. And the book I put together, which was something I put together during the pandemic, and I published it shortly after my mother passed away. And one of the things I did was I answered all the questions that people had as it relates to what I do, and I put it all into like a book, right? And the book is really facts, but it's really hidden around allegory. Does that make sense?
That
And
makes
so stories and testimonials from people I used to work with, families that are investing in us and stuff like that, to sort of demystify a lot of what was going on behind the scenes. And that actually builds a tremendous amount of credibility, not just writing a book, but at the same time, Chandler is actually being able to disseminate that book. And to me, that is like the first step in a relationship is, you're offering something. I give them a book, and it also gives me an opportunity to go back and bother them again for a book review and ask them what they liked about the book and what they didn't. And well, so what are you investing into? What are you doing? And you build the trust that way.
Absolutely, you can build the relationship. I
Hmm.
noticed, you mentioned a lot of loss. You're with your dad and with your mom, and I
Yes.
lost my dad, and it always makes you rethink, legacy, and what's next.
Yeah. Yeah.
And it sounds like you wrote several, made big decisions and wrote several books, right?
Hmm.
How have these books changed, the trajectory of what you've been doing, in the capital raising space?
They have, because I think it's just easier for people to relate to you and to open their pocketbooks to you.
Mm,
If you're there, the fastest way to legitimacy is two ways. Either you can own a sports team or you can write a book. That, and I think when you look at it that way, it's what do you want to do? You want to be able to come out with legitimacy and authenticity. So the books themselves, I mean, nobody ever regrets writing a book, right? They might want to change it later what they wrote, but nobody ever regrets writing a book.
So what is it that you want? You have these exclusive relationships with the rich or the wealthy, I should say, or the ultra wealthy, because your book talks
Ultra
about,
wealthy. I mean, rich means different things to different people in
right?
America, right? So, okay, yeah.
What is it that you want?
I don't know. It's interesting. Like right now, I'm having a good time. I love the deal business. I love what we do. I love working with my partner. I think at this point, it's just sort of maybe to continue on building a legacy, I'd like to work with my second cousin, who's a famous actor, Steve Buscemi, to put together a foundation at one point. And, I think I could probably get that done, in the next 5 years. So just continue to do more stuff like that.
No, that I think you'll definitely get that done. Now, I know you've been doing quite a lot of travel with your conferences and going back and forth. What do you have next coming up for you?
Right now, coming up next, we have just the deals that we're working on. We're going into SpaceX. We're going into a Class A industrial deal. So that's going to keep me busy for the foreseeable 30 to 45 days at least. There's also a lot of networking events going on. I'm having an event too, as you know, in Indiana, Miami, where we have our family offices come down. So there's a lot going on. And then after that, I think I want to pull back the throttles a little bit and maybe take some time off in August. But when Elon Musk says that, things move. And, at that point, we'll probably be getting into another one of his companies.
Now, all these unicorn companies or companies that, that you're investing in, how does someone break into this industry, right? And invest, right? To be a part or become in the circle of trust, as you say, and to
Yeah, yeah. It's real simple. Are you ready? You write a check. A lot of people like to go to free conferences, but the point is that the conferences that I've been to, and if you were to take the Michael Milken conference, that's a $25,000 ticket that was able to solidify not just relationships, but deals that we're in that recently just got a, 8-figure investment from a Middle Eastern $1 trillion sovereign wealth fund. So, the sweeter the air, the higher the barrier to entry, the sweeter the air. And that's what you want to do. You want to network. You want to eventually own a professional sports team. You want to continue to climb that ladder because that social status today means a lot more than it ever did before, where everybody's trying to prove themselves and differentiate themselves. But if you own some football team in your hometown, right?
Charlotte,
Everybody would
Charlotte
refer to
Panthers.
you as, yeah, yeah, yeah. Okay. I would refer, so what's your football team?
My team is the Steelers. I was born in
Okay,
Pittsburgh.
Steeler. Okay, so that's fine. So I know the family in my book that actually pioneered sports ownership, and actually, I think, if you're in your hometown and people introduce you as the guy that owns part of the Steelers, that's, that what does that do? When your friends say that behind your back, I know the owner of the Pittsburgh Steelers, what is that? How does that make you feel?
A lot of prestige. I don't know. It's just like feels good. I'm like, who owns a football team?
Who owns a Class A skyscraper in New York, right?
Right.
Who owns all of this stuff? So, it's becoming, clearer and clearer, more so every day. So, yes, prestige, how you would feel, right?
Yeah, I would feel great to own,
Okay.
like you said, a Class A skyscraper or a football team. And
Yeah.
is that what sells? It's the prestige that makes
Of
the
course it is. Yeah, we're in a Gucci nation today. You aren't worth anything unless you have a Gucci belt, right? And that's what poor people do. But like, people with assets, they legitimize it. And, their idea of a Gucci belt is a yacht. So
right.
today, people, it's all about and social media and swipe culture has turned us into individual brands as people. That's what it is. And people want to be seen as being richer and more sophisticated and sexier than their brethren, especially on social media. So if you go out there and you tell your friends you're investing in a Class A investment, industrial investment in Dallas alongside one of the most storied and serially successful families, that's going to change the tone a little bit, and people are going to want to talk about that. The people who don't care about that stuff are usually the middle class investors who are not rich, they're looking to get rich. Whereas the people who have inherited a lot of money or the dopamine's wear it off from selling a company and they're looking for something to do, they're looking to continue to see how much more can I get for my money? Because at that point, money's meant to be used, not spent.
When you're speaking to the different classes of wealth,
Yeah.
do you
Yeah.
find yourself educating them, or is it if they're on a certain level, they understand?
It depends. I think, there's new wealth and then there's old wealth. And let's just say anything over $100 million. Okay. There are people who have inherited something. They don't really know the ropes. They don't know. And that's going to be a really big issue, I think, because there's going to be a lot of money transferred into the hands of like the millennials going forward. And we don't know where that's going to go. But they too do not know anything. But if it's someone who's an established family, they usually have a guy like me that they face off with first, before, and then, that's the guy that sort of influences the family. You come in, you meet the family. And I've done this before and it works. But they, when I talk to them, it's a different conversation because they're already more sophisticated because they're more established.
Are there different protocols that, let's say, the New Wealth has that you have to put in place? Like if they just
You
get,
got to be patient with them because they have egos. And this is where, like, if you see like anyone who's made a dime really quick up front, all of a sudden you see is like conspicuous consumption. They get their Ferrari, they get their Rolls Royce, I mean, it's the same way. It's the same way with sports team players and movie stars and rock stars. It's been like this, and that's who caters to that. So you got to let them burn off their yaya sometimes, because I've been in these conversations where guys like, yeah, I just have all this money, send me screenshots of his, account at Morgan Stanley. I'm like, so what's going on? He said, oh man, I just bought this great Rolls Royce and everything. They got to get the yayas out first. You know what I mean? And that means different things to different people. To them, that might mean, doing something else. But as it relates to young guys like you who inherit or make a lot of money, both self-made or inherited, if that's what I mean, there's always going to be with the inherited that, oh, Chandler, you didn't earn that. You got that from, your family. They handed it down to you. And then you're always going to be like, trying to prove yourself. And the way to do that is to get into assets that are better than your friends, right? And so it enhances the prestige. The same thing with like, I write about this in my book, Investing Legacy. It's the mogul too. He's the guy with the big Rolex. He's the guy that's got diamonds on the bezel. This is who this world caters to is the people who just came into it because they want to improve their status. Does that make sense?
yeah, that
And
makes,
culturally, that's much more acceptable. Like if I'm meeting with a Chinese family, I'm blinged out, right? But if I'm meeting with like a guy from like the Midwest to Kansas City, there's no bling.
so you're adaptable.
Adaptable, yes,
And that makes you
adaptable.
relatable to your clients because you understand them.
Yeah, because I was in front of a very wealthy Chinese family once, and the guy I was with didn't really dress that well. It wasn't that he wasn't good looking, but he didn't dress well. And they didn't like that because that was a sign to them of respect. Does that make sense? It
Yeah,
was like a boxy suit, it's like, oh, you gotta wear the patique sometimes, and this is when you wear it.
in your books and all and everything, if you could summarize, let's say all your books were erased, right? All your YouTube's videos were gone.
Mhm.
What is it that you would leave behind, right? What message would you leave behind that represents you?
I'd like to say it helped a lot of people through networking and, not just myself. I think networking is really where it is today. Since the pandemic, I think, Chandler, we've been in a loneliness epidemic where there's a lot of people who, I wouldn't say shut-ins, but they don't see humans very often. And I think what I would do is I was to go back and somebody would say that is, and I have a mastermind. One of the things that somebody brought up was I'd love to have something on networking. And I'm like, well, ask and you shall receive, and I think that's something that we'll work on because I never really thought about that, really, to be honest with you, that, people wanted that. But it's networking is a skill. Some people are creepy, some people don't want to be creepy. If you don't want to be creepy, we'll be talking about it. But yeah, there's a way to do it. And networking I think of as like uh love and war, nothing's off bounds, right? And so I'll do anything to network with the right person.
I appreciate that, Sal. Do you have like any rules about networking that you use when you walk in these rooms?
Yeah, when I do, I always want to make sure that I calculate attention. Right now, Elon Musk is getting a lot of attention, and attention is the first step to persuasion. And what I would tell you is that I always like to be of service to people. If you're of service to people, that's great. The people today who are the losers, who you can point, are the transactional ones who are trying to shove a pitch deck in your face or text it to you
Without asking.
without asking permission. We call them deck picks. You didn't ask for it, it's unsolicited, and makes you feel bad that you're sitting, that you got it.
Most people think you could just hand over or send a deck pick to an investor, potential investor, and they would love it, love the offer, right? But that's what I've learned is that's not true.
That never works. That never
Where does
works.
that misconception come from?
I think it comes from a misconception that people have egos and they think that the deal themselves are putting together, which probably isn't a deal, but an opportunity. A deal and an opportunity, are two separate things. But I think what happens is that a lot of these people are just new and they treat people like ATMs, right? And that, and some people like the attention of that. But really what they're doing is they're not doing anything to really build a relationship. And when you're building relationships with families, you got to think about you're courting someone for a long-term marriage. Anything we do is privately held. That means we hold it. You were on the call yesterday. One of the holdings we're going into has a 10-year window. Okay. That's 10 years you're married to Chandler, and that's what, people don't understand is I'm going to invest in this guy. Number one, does he look like he knows what he's doing? Is he wearing the right clothes to the party, both literally and figuratively? And really, you got to make yourself. And I think the best way that you can do this is something they taught me at Goldman Sachs. And the question is, do you trust this guy with your wallet? And if your gut says no, then it's a hard yes or a hard no. Does that make sense?
That makes sense.
Yeah. And just like I know that you've been successful raising capital, congratulations, by the
Thank
way.
you.
I love
It's working.
following along and supporting you and championing you. But I mean, you obviously dressed the part and you know what you're doing and you have a track record. But you're also probably learning too this about the relationships, the long-term relationships. And that big check didn't come from someone who you just met off of the interwebs, right?
No, he
Okay.
actually been following the journey, and he loved what I was doing, and he
Because
invested in me.
people invest in people. People
Yes,
invest in people.
people invest.
Your brand is your name, your brand is your promise. And so he saw the same promise of you that have high integrity and you keep your word and all that kind of stuff that people really, really appreciate, especially wealthy people. Isn't that great?
So that gut feeling, the
Mhm.
does are they wearing the right clothes to the party, visually and figuratively?
Energy, vibes. All right. The girls call it vibes. All right. But
Yeah,
the energy. It's like, is this guy I mean, there's a lot of people who have creepy vibes. And I know they have a lot of money, but I don't know like really if I want to be married with them. And I'm sure they would, be interested in talking to me. But there are certain people you just don't want to link up with because you just know later on it's going to be not trouble, but it's going to be a lot more. And I'm not saying anything nefarious will happen, but you're dealing with investors sometimes who are so scatterbrained because everybody's using them as a pincushion to attack them, to pitch their deals to. And so getting their attention sometimes is hard and they're all over the place. And even with very smart people, there's a lot of ADHD out there. It's an open joke in the industry, of course, but everybody's out there, and you have to be very careful and you have to curate that attention. That's really what it comes down to.
is there anything such as bad attention to attracting bad attention, or
I mean, in show business, that works, right? But I wouldn't be like, running nude down the street, trying to intense investors. I think the bad attention is if somebody does a Google search on you, that's not good. So you don't want that bad attention. And of course, you can always work with someone to alleviate that. But as they say, like bad publicity is good publicity. If you're a Hollywood starlet or a YouTuber or a big influencer, absolutely. But if you are, in most social settings and networking, the last thing you want to do is to like, get too drunk at a party and be known as that guy. You just don't want to. And I think that's bad attention. Bad attention too. And I'll tell you, like, I subscribe to the Michael Jordan rule of politics, which is red and blue, they both have investment capital. AUM is AUM, right?
AUM is
Uh,
AUM?
AUM is AUM. He sells sneakers. I sell AUM, we sell different things like SpaceX and we are actually legit. We're actually merchants of legitimacy when you think about it. So he sells legitimacy. I sell legitimacy in a different way, but to both sides.
Absolutely. So Sal,
Hmm.
if you can leave us with one last thought, what would it be?
Always be raising capital.
Always,
Always be talking to
even if you
people.
don't have a project.
Even if you don't have a project, talk to investors. That doesn't mean, that's what it means. It's like you are talking to investors. Always start building relationships. That's what I mean. Always be raising capital. Don't ask for anything. Provide value. Network with people. Rich people have problems too. If you can help them with their problems, either they will invest or they will hand you over to in-kind families who would invest in some of your deals. And I know that through personal experience.
Sal, can you tell us how can people get in touch with you, involved with your reading your books? Leave us.
Yeah, I'm going to give a free copy only because it's the Chandler Chase show, and I would never do that. And I love saying Chandler Chase. What you want to do is you want to go to Sal, email me at sal@investinglegacy.com. Send me your address, and what I'll do is I'll get an autographed copy of the book out in the mail for you. How about that? Good little bonus,
Yes,
right?
that's a great bonus. Thanks again,
Wonderful.
Sal. Appreciate having you on the Chandler Chase Show. Take care.
Thank you, Chandler.
And
Thank
I'll see
you.
you in Miami. All right, that was Sal Buscemi showing us why average returns are just another form of mediocrity. If his insights solidify her, share this episode with one ambitious friend and tag me on Instagram, LinkedIn, and subscribe. Remember, capital flows conviction. Only excellence keeps it. See you next week. Ciao.